Thank you for joining us today. We are starting this day today with of course thinking about all of those that help us going through the sanitary crisis times. In the name of the Romanian Investor Relations Association, and together with other market and financial market participants, as I was saying, we are extremely grateful to doctors that do whatever possible to save our neighbors, our colleagues, and our people. And we see these days a fight for resources, and we will be talking about resources today as well. We also agree that our lives will never be the same. We noticed the black swan that hit our lives, the COVID pandemic, that completely turned our old upside down. But we have confidence in those who help us fight with the virus, and we remain optimistic. We also know that this situation will somehow and sometimes end. But until then, we should be grateful for being healthy and being able to think about the future. Of course, we have a multitude of questions, starting from most basic ones related to food, utilities, jobs, money, and ending with more forward-looking ones, like lesson learned and economic solutions and other solutions that the economy would recover. And discussing about the state of the economy, inevitably we talk about our money. We see the struggle of our governments to handle between lack of resources and looking for solutions in order to avoid stopping the economy. The stock markets worldwide turned on a negative trend since the crisis started, with small and slow rebounds once financial measures were announced by various countries, or in Asia, where the fight with COVID pandemic has brought some results. Romanian capital markets have connected with the global markets, once investors, of course, were in some cases forced to sell. IPOs most probably stalled, and perspective is so far not very clear. Many listed companies have put efforts into fighting with the pandemic, and we have seen a lot of support towards the sanitary system, and we are grateful to those companies that are doing that. They have communicated proactively, and they are building continuously the Romanian economy. And of course, we need to also see the glass half full and notice the discounts that are all available on the markets that could also maybe help us or inspire to enter to buy. Well, the purpose of the today meeting was to have an agenda of the financial markets, to see what is happening around, to see what is the sentiment. And I would like to thank all our speakers present today that will share their opinions in such difficult times. And the floor will immediately pass to Claire Lavery from Rivel Research and also board member of Arir Society. And in between, I would like to thank the presence of Cristian Popa, member of the board of the National Bank of Romania, Randu Kahanga, president of the board Bucharest Stock Exchange, Adrian Tănase, CEO of the Bucharest Stock Exchange, Johan Meyer, CEO of Franklin Templeton, Vlad Stoicescu, Strategy and European Compliance Manager of the Bucharest Airports National Company, and Dragoș Manolescu, Deputy CEO of OTP Asset Management. And at this moment, I will pass the floor to Claire for a presentation on their recent perception study done on global markets and how they perceive the impact of COVID-19 on the markets.
Thank you, Daniela. So good morning, everybody, and thank you very much to Daniela and team for putting on this event today. At a time of social distancing and lockdown, trying to maintain connectivity via the use of technology is, well, it's most definitely the way forward. And thank goodness that we have at our disposal. As Daniela mentioned, my name is Claire Lavery. I'm the Executive Director for Europe and Asia at Rivel Research Group. And in addition to this, I'm also a Board Director of the UK's IR Society. As a business, Rivel, we specialise in data-driven research with a particular focus on the investment community. And over the past few weeks, we have been busy conducting research into the impact of the coronavirus, interviewing both the investment community and the global IRO community. So I'm going to share my screen now and jump into the data for you, okay? So whilst global investors were becoming relatively optimistic towards the end of last year, you can see there in the middle chart, November to December 2019, the coronavirus has simply turned everything on its head, with 75% of investors now expecting economic conditions to definitely decline over the next 6 to 12 months. And here you can see how quickly things have changed during the period of the 11th of March through to the 20th of March. Just looking at the chart on the left-hand side for a moment, companies went from seeing the coronavirus having a minor to serious threat. And at this stage, those at the higher end of the higher threat end of the spectrum were those companies which had Asia exposure. But as the coronavirus became a pandemic, the threat obviously has increased, with 41% viewing it as a very serious threat and 51% viewing it as a serious threat to the global economy. To the right-hand side of the screen there, you can see to what degree companies felt it would impact their investment appeal. And please remember, as I mentioned, this data is from just over a week ago. So those that view the coronavirus as a minor threat are probably companies that are maybe less exposed because of the industry that they sit in. And of course, there are going to be companies out there that will also benefit from tailwinds in these circumstances as well. Now, in terms of what steps companies have taken internally to mitigate risk, you can see here that most are thankfully focused on employee safety and implementing social distancing measures, whether that be working from home, working shifts, ensuring employee hygiene, or enforcing travel bans, etc. And then you can see the other aspects below that, but the main one is focused on employee safety and social distancing to obviously flatten that curve. Over the half the companies actually that we interviewed now have their workforces working at home there, but you can see the differences between North America and Europe, a little bit less in continental Europe. Now, from a investor communications perspective, and in terms of what investors want to know most right now, it's basically they want to know what the financial impact is going to be. They want to understand the outlook for the company, and they want to know how the virus is going to impact the company's financial performance now and going forward. And not surprisingly, they also want to understand about the liquidity of the company and the strength of the company's balance sheet. As for how well companies are responding and keeping investors informed about the impact of the virus, well, companies think that they're doing a pretty good job here. You can see 47% are saying somewhat well. But in terms of, there's a lack of visibility in terms of how long this is going to last, and the situation continues to evolve rapidly. It's obviously not an easy task to ascertain right now, but it is imperative. I've got a backing track. And but as I said, it is imperative for IROs and management teams alike to be accessible and responsive more than ever. So among the conversations that are happening, 60% of companies are saying that they're being very transparent, but you can see that there is clearly a little bit of room for improvement. So just to wrap up, clearly a realistic and pragmatic approach needs to guide investor communications and outreach at this time. And this means focusing on the immediate future when at all possible. It really is no time to go silent, not speaking to the nature and scope of the near-term challenges, risks communicating indecision, and the implication that investors should fear the worst. Companies need to be able to convey confidence that they have contingency plans in place and are really meeting the challenge aggressively. There's no doubt that companies will be assessed on their response going forward. And with that, I'll hand back to Daniela.
Yes, thank you. Thank you very much, Claire. It is just a confirmation that communication is much more important during crisis times. And this is what we have encouraged all our members and listed companies to do. And actually, the perception of the market is that they did well. So we have explained what happened. We have tried to find also insights of how the sectors, various industries will be affected from this perspective. Claire, in terms of things going on, it's clearly that everyone will be moving online. How this will change the communication with investors? Do you have any other feedback? And also concluding, do you think the lessons were learned after the 2008 crisis?
Yeah, I think a couple of things on that. Whenever we were, the past 2 weeks, as we've continued to do research, the responsive rates of the investors have sort of been up and down. And that's largely been because everybody, we all have been adjusting to working at home, getting used to technology, organizing the kids and making sure that we have our working spaces set up to be able to do that at home. So there was a bit of choppiness, but I think now that we are sort of getting into, I guess, what you could call the new normal, that we're starting to see investors get into what is a difficult groove, but they're getting into a bit of a groove. The other thing that I think is worth noting, just from a company perspective, I had a conversation, as I mentioned just before we started today, with Diageo last week, and I was speaking with the CEO and the CFO, and they issued a very significant bond about a week and a half ago, and never in their minds could they ever comprehend executing such a transaction with having everybody dialed into a video call, so they were just blown away with the fact that, my goodness, never did we think that we would be doing this using technology and not having the opportunity to do this person to person in a meeting room. So I think companies are adapting very quickly. I think the use of technology has been a revelation for some. But I don't think, going forward, it's going to replace that opportunity to sit in a room and be face-to-face with a person. But it certainly makes life a lot more easier as well. And perhaps it might help company budgets in terms of investor relations if investors are more responsive to companies using technology, maybe if they're in Europe versus the US.
Yeah, thank you very much. That's definitely a new times that even IPOs or, as you were mentioning, bond issuance can be done online. Claire, thank you very much for joining us today. I know you're a great supporter of the Romanian capital markets, and we hope this will go forward with the time. Thanks.
Definitely. Thank you very much. It's great to see you guys responding to this and doing these digital events as well and keeping people connected.
Yes. Thank you very much, Claire. Yeah, so coming back to our discussion, and as we can see now, all our guests are live and are with their webcam on. And thank you for joining today. We know that these are difficult times, and everybody is busy handling continuity plans. And I was mentioning in the beginning that we will go through the solutions, we'll go through what happened since the last crisis and what can be done better. And I would invite Cristian Popa to open the floor, board member of the National Bank of Romania. As the National Bank, and similar to other central banks, they were taking several measures in order to ensure liquidity in the market. So the question to Cristian Popa is when this effect will be seen, and if this is enough. We don't hear you, please. No.
Hello, everybody. Do you hear me?
Yes.
Great. I'm very happy to have this virtual meeting with you. So I will start with describing the decisions that the National Bank has taken in the last period. They are all positive for the market and for the economy. First of all, we had an emergency monetary policy meeting almost 1 week ago. We announced a comprehensive package of measures taken. I would say that it's quite well calibrated. So we cut the interest rate, the monetary policy interest rate, by 50 basis points. Also, we cut the corridor between the depo and the credit interest rate. So basically, the Lombard rate, the rate at which the banks can borrow liquidity for us, decreased from 3.5% to 2.5%, and this can also again already be seen in the monetary market. Also, we announced that we are open for repo operations, so operations where the banks are coming with treasury bonds to us and get liquidity back. So a measure to prop up liquidity and to be sure that the banks have adequate liquidity in the systems. Also, an important measure which was probably was not expected, but these times asked for special measures. We announced that the central bank will start an acquisition program of treasury bonds from the secondary market. And the analysts are calling it quantitative easing. We just see it as one of the measures to tackle the current situation. Also, we announced that we are ready to cut the minimum requirement, the minimum reserve rates in case if the case is needed. So also a measure to increase liquidity in the market so that the money flows into the system and into the economy. And also we canceled our calendar of monetary policy meetings so that we are able to call a meeting whenever necessary. So this also gives us flexibility. I would say that the measures were necessary for ensuring and enhancing liquidity in the secondary bond market, and also to help the financing of the real economy. On this subject, I would send a message to the banks that we encourage them to use the liquidity facilities at their disposal. So be it the Lombard facility or the repo facilities, we are here to provide liquidity so the market is functioning well. Another measure announced last week, we had a supervisory committee that decides that basically let's say lowered the requirement, the legal requirements, so that the banks are able to postpone monthly installments for clients. So basically, we created the legal landscape so that they are able to postpone the monthly installments during the COVID crisis. Also, in the same meeting, we decided that the banks will be able to use the capital buffers, the extra capital buffers that they have, mainly the systemic risk buffer that they are now able to use. So less constraints from their side. It's basically it's a small reduction in the capital requirements. Also, the same thing in terms of liquidity capital requirements. We announced that we will tolerate breaches to their minimum requirement of 100% if the case is needed. So basically, they have more flexibility also on the liquidity side. And if we're talking liquidity, I would like to share with you a few figures. Both the average and bank level liquidity ratios are over 100%. So the entire safe banking sector is functioning well. It's well liquid. The average liquidity rate at end of February was over 250%. So just to get an indication, and over 70% of the banks have had a liquidity ratio of over 200%. Another measure announced by us, we had another board meeting where we decided that in terms of resolution, basically resolution is a cost for the bank. They are they are contributing to the resolution fund. This is a cost for the bank. We delayed these contributions by 3 months with the possibility to delay it further. So basically we're saving some expenses from the banks. Also, we postponed some reporting requirements in terms of resolution from the banking side, so they are able to focus more on the banking side, not on the reporting side, and also lower requirements in mirroring the capital requirement. We also had a recommendation sent to the banks that we recommend that they capitalize the last year profits, so not paying dividends this year. But I would point two things here. This is a recommendation, it's not a requirement. And we point out that it's in their interest to be sufficient with their capital, to keep enough capital, and to allocate capital in the best way they consider. So it's not a requirement, it's a recommendation. And you are talking about the comparisons with a decade ago, with what happened during the financial crisis. Here I would say that the banking sector is much better prepared to tackle the current situation. It's well capitalized. The average solvency ratio is 18% for the Romanian banks. The liquidity, like I was saying, is quite good. We don't have any situation there. Also, in terms of indebtedness of the clients, last year or even 2 years ago, we implemented the DSTI ratio of 40%. It's debt to service income. So basically, the maximum level that the clients can get monthly installments out of their revenue. So we implemented this 40% limit. So, and the average is below that. So the average of the average debt to service ratio of the Romanian client is around 40%, which is lower than a decade ago. Also, if you look, I mean, a decade ago there was a big issue with the FX loans. Now the things are the other way around. If 10 years ago we had like two-thirds of the loans were in FX, in euro, dollars, or Swiss francs. Now it's the opposite. Only 1/3 of the loan book is in foreign currency. And also, if we're looking at the loan to depot ratio, now the banking sector on average has a loan to depot ratio of 75%. So out of 100 RON, let's say, of depots, only 75 RON are given to the clients in credits. This was the other way around also in 2009, when the loan to depot ratio was above 120%. So just to conclude, the banking sector is in a good position to weather the current situation. We are here to help. We are on duty. We are more than 50% of the central bank is working from home, but it's working. We are all working to weather this, and yeah, it's. I'm trying to be positive, and I'm quite positive.
Yes, thank you. Actually, it's a very comprehensive set of measures, and at least looking at the numbers, Romanians individuals have learned to be less indebted, I would say, and not using any more EFIX. Thank you, Cristian Popa, and I would pass the floor now to Radu Hanga, the president of the board of the Bucharest Stock Exchange, because in the past 10 years we have been taking actions to encourage Romanians to invest more. On the other hand, we still have the numbers that show that Romanians hold bank deposits, for example, in their bank accounts, and we have been struggling to get them to invest. What is your perception? What happened in the past few weeks, I would say, and having in mind also that you just started your mandate at the Bucharest Stock Exchange as president of the board, what is your view on what is happening and the measures taken by the market participants?
Good morning, Daniela. Thank you. First of all, I'm very happy to hear the presentation of Cristian and very happy to see Banca Națională a României acting just like the other central banks around us in supporting the environment. As it was mentioned, we have to note that the economy, the local economy, talking about Romania, it's much more stable compared to previous crises. And I think looking at Cristian's presentation, the most visible improvement it's in the leverage of the economy. Loans to deposit ratio went down from, I think it was around 160% back in 2008, and now we are a little bit about 70. That means that there is less debt in the market, and I would say also that we saw the deposits in the banks of the local players, either individuals or companies, going up in the last years with around 10% per year. So we see more liquidity in the market and less leverage, which is quite a positive sign in terms of the ability of the local market to weather the crisis. Going forward and talking about Bucharest Stock Exchange, what we did is that we are focusing on operating as usual, of course, with most of people working from home. We have to provide what we committed ourselves to the investors and to the listed companies. We are committed to keep an open market and to provide liquidity to those which are willing to buy or to sell. I think that each crisis provides threats, but also opportunities. And if you are looking now, we say we are in crisis. If we are looking at things a little bit differently, we might think that the crisis was even bigger 1-2 months ago, because market prices for the local companies were, and also for the foreign markets, this is valid, they were 30 or 40% higher. So at this point, even if it looks a difficult environment, there is also an opportunity to buy stocks at various local companies or foreign companies at discounts of 30 or 40% compared to what we had just 1-2 months ago. So that are the two messages of the Bucharest Stock Exchange. We are committed to remain open and to provide a stable trading environment for all the players. And we are looking at the opportunities which are created in the market. I think that, as you mentioned, Daniela, we still have to work a lot in terms of bringing more investors in the market. And I think that current crisis provides a good entry point for those which are willing now to start investing. Thank you very much.
Yes, thank you. And I remember those times in 2009 and 10, and yeah, it was quite hard to regain and re-enter in the market. But this moment, I'm sure we are much more prepared. And Romanians, they have liquidity. So we know that more than 30 billion euros are in bank deposits, but maybe Christian will share more about that later. I would thank you, Radu Hanga. Adrian Tănase, how this situation changed your plans in terms of, or maybe they didn't, in terms of current projects? I know CCP and building a derivatives market is very high on your agenda. A derivatives market could have created maybe even more volatility. We have noticed the Austrian market and the Austrian authority that has banned short selling, for example. On the other hand, this year would mean an upgrade for the Romanian capital markets to emerging markets. How do you see the situation evolving, and how the Bucharest Stock Exchange is adapting to the situation?
Good morning, everybody. Thank you, Daniela, for inviting me to this panel. Yes, our project, the Central Counterparty project, is going forward. So as long as we are able to work remotely, which is not very nice from my perspective, but for such a project, and but as long as we could work, you are going for the project and together with our partners here. And yeah, the signal is that we want to implement it according with the initial timeline. And maybe nowadays the need to have a derivative market maybe is higher than, so probably everybody's figuring out that derivative market would have helped this in this period of high volatility. So to have some hedge products into the market maybe would have been better than the current condition. So our message is that yes, we are going forward with the project, and hopefully we'll have it initiated very soon in terms of initiating the authorization and implementation process. Yeah, this is my message about the Central Counterparty. Maybe yes, also these days, maybe all the market has figuring out that maybe you have to implement some other solution into the market, maybe to have some more digitalization to the market regarding the opening accounts process and the proxy voting process. And yes, we are trying to promote these kind of solutions, and the communication with authorities these days is very important to have those kind of solutions implemented sooner than later. Yeah. Anyway, we had these ideas to bring these kind of solutions in the past as well. Yeah, I'm really a great fan of these digital solutions for the investors into the market, and these days maybe the necessity of this kind of solutions has come out as being very high. Yeah.
Yeah, thank you, Adrian Tănase. Actually, we have seen even the state that has adjusted its communication, and hopefully we will be able to open faster accounts at the Bucharest Stock Exchange and trading at the Bucharest Stock Exchange on this occasion. And, you know, there were jokes that what we did not do in 30 years, we can do now in a few months. So, yeah, there is also room for progress. Thank you, Adrian Tănase, once again. I would like to also make and put our market in a perspective. And I will be inviting Johan Meyer, country manager of Franklin Templeton, to share us the perspective of an international asset manager that is trading, of course, global markets as well. And when looking at Romania, how different it is from other markets, how different it is from other frontier and emerging markets, and what is the market sentiment in Franklin Templeton now?
Hi, Daniela. I just want to check if my audio is okay. Can you hear me? Okay. Yeah, thanks for the question. I think Romania stacks up very well compared to other markets around the globe. As Christian described earlier, the situation is very different compared to where it was 10 years ago. Typically the companies are in very strong positions with good cash flow and strong balance sheets, and what is extremely important in any well-functioning economy is the liquidity and the strength of the banking system. And clearly, this is much, much better than it has been during previous crises. So I think Romania does compare extremely well. It is clearly not the only country that's affected in such a way. It doesn't matter really where you look. The market impact is being felt around the globe. From Australia across Europe, Africa to the Americas, and really the pain is most acutely felt in the energy sector. But there is also, of course, an underlying issue here with a price war between Russia and the US. So a lot of the companies that are suffering around this is more collateral damage than being directly involved in these actions. As far as the Romanian market is concerned, yes, I think there is tremendous value that's appearing on the stock exchange. There are certainly opportunities to buy companies at valuations that we haven't seen in probably a decade. So I think for investors that take the opportunity to get invested when prices are depressed and when sentiment is negative, there is a very good opportunity to improve returns over the long term. I remember early on in my career, someone asked me if I've made any mistakes in investing, and I spent some time thinking about it. And the immediate thought is, well, you know, I've recommended buying or bought some companies that have not performed as well as I expected them to. But I think the even bigger mistake can be not buying the companies that you're supposed to, the companies that will be around, that will survive, that have sustainable business models, that have the cash flows, that have the strong balance sheets right now, that can weather the storm and that will be around. So I think that is where the opportunities are at the moment. From our business perspective, our office has been at work from home for almost 3 weeks now. Fortunately, we are we're very lucky that we have a head office in Silicon Valley. So we're highly dependent on technology to begin with. Of course, now the technology depends on how we can use it from home. But I think the transition was pretty smooth. Of course, it's not always painless, but I think we work extremely effectively, even sitting in our home offices or wherever we might be. What is absolutely key is communication with the various team members. Whereas before you could pop around to someone else's office and have a quick word, now it helps to have a more rigorous schedule in terms of making contact with various people in the organization to make sure that everybody's keeping informed and keeping on top of the various issues. So that certainly is taking up more time, but it still ensures that the business is operating as it should be.
Yeah, thank you, Johan Meyer. That's quite encouraging, and actually, yeah, Romanian capital markets have declined as well because it's a contagious effect, but we will be exploring more whether these differences can come from and if the local market can differentiate itself in a good sense compared to other markets a little bit later as well. I would turn now to Vlad Stoicescu from Bucharest Airports, and thank you for having you with us, having you here. When we first started to arrange and to organize this event on March 31st, we were thinking about a follow-up after the London Investors Conference that we all attended. And actually, it was a very well attended and well organized conference with the investors meeting, but the crisis already was emerging. What were the discussions that you, Vlad Stoicescu, and Bucharest Airports had with investors a month ago, and what is the situation now? And we can see your office actually in the back of your camera, and we are thinking when the situation will come back to previous times.
Well, airports are usually a barometer for the economy, for the national economy, and we are now running at 5%. So it could be viewed as quite tragic if we weren't all speaking on the internet right now. So I'm thinking that as of today, my main competitor will be 5G networks. But let's get back to the subject. So London has been a very fruitful experience, mainly due to the interest manifested in our IPO. Our position remains the same up until now, at least. We are looking to consolidate the company with our investment plan before going public. The current events might change our perspective, but we have to calculate based on quarters, because right now we are operating on quarters. So we have to see if there are unforeseen evolutions. But we are currently working with a scenario where the market picks up in the third quarter. As we have been instructed by international regulatory bodies such as Airport Council International. We will adapt as we go. Locally, the COVID-19 crisis found us quite liquid and healthy. Our first concern was to ensure continuity and rationalize the staff by implementing work from home schedules to keep an operational reserve. No unemployment or severe staff measures have been requested, but we are looking into rationalizing expenditures in the budget, the expenditures budget where we can. The main shareholders, the Ministry of Transportation and the Prime Minister, of course, have sent a very clear no delay message about the investment plan. So we are still ongoing with doubling the capacity here. We treat this crisis as a global pause rather than a tragedy. We are optimizing the budget, acquisition and investment plan quarter by quarter to keep up with the impact. So the statistics are quite positive. We might even turn a slight profit at year's end up until now if traffic picks up in the third quarter. As far as expectations, we expect that investment funds will crowd the borders when this is all over with. Some measures taken within the EU will have an impact, and mainly a negative impact on the euro. Foreign capital could consolidate the local market, and we are looking forward to what will happen in the near future. So thank you very much.
Thank you, Vlad Stoicescu. That is also an quite encouraging statement. Rather than Q3 is still quite far from today, actually. So from your perspective, and I would return a little bit to Johan Meyer as well in terms of preparing for the IPO. So the plans go in the same pace, but it's about the timing, and there is also about investments, right?
Yeah, I think Daniela, we're still quite early on in this COVID crisis to be able to say there is going to be an impact on any IPO timeline. Clearly, Vlad has given the indication that that this is going ahead as was previously the case. So at this point there is no need to expect that there is going to be a different outcome. I think the most important factor is that there is complete shareholder support to drive this process forward, and even if there is a delay for whatever reason, that the process is seen through to the end, because that ultimately will determine the success and the progress of the Romanian capital markets. So it's companies like Bucharest Airports, but also companies like Hidroelectrica that is even more advanced in the process, that is currently in the process of selecting equity advisors and legal advisors to progress with the IPO. The next stage will be the appointment of an investment banking consortium. So we've always been of the view that a realistic time frame for the IPO would be around the first quarter of 2021. So at this point in time, we do not believe that there is any reason to change this view. As long as the company can continue working from both from the office or from home, then this will be taken forward.
Yes. Okay. Thank you. I would now turn to Dragoș Manolescu and ask him in his capacity as an asset manager in Romania, if he would invest in any IPOs this year, and what are the scenarios that you are working on for next couple of months and also for the year.
Hello. The three scenarios that we are working with are the V-shape, the recovery, which, to be honest, is the less likely from my point of view. And the other two are a U-shape scenario, which is the most likely, and W shape, which is similar to 2008, 2009. When after the Lehman Brothers default, we had the February-March 2009 with even, let's say, a deeper correction. And this is the second most likely from our point of view. And that depends very much on what will happen with the development in the fight against COVID-19, and if, as many are telling, that we will have COVID-20, because starting autumn, September, November, most likely this virus will reemerge. So that's why I said that this is the second scenario, and if this will re-emerge and we will not have any vaccine against COVID, I think we might have against similar measures and correction on the markets worldwide. What we'll have at the moment, and what we will have also in the second scenario, are from my point of view, we have now a door open to buy at discounts. Even if the prices will go even lower, I think that for the long-term investors in equity, let's say a door was open to buy solid companies at discount, and this is valid for Romania, and also this is valid globally. Globally, what we are looking is the US Stock Exchange and the European Stock Exchange, where many companies now are trading at the very attractive indicators comparing to the prices from a couple months ago that we had a couple months ago. So I think in the long run, we will, let's say, the investors in equities will benefit most. What also I want to emphasize that how this crisis will develop depends very much on the central banks and on the governments, and also on the relationship between governments and central banks, because if in the past central banks and governments were used to play with monetary policy and fiscal policy, and one, let's say, counterbalance the other, I think now the rule of the game has changed, and the central banks have to work together with the governments to restore confidence for the markets. And I can see this in the US. I can see this in Poland, in Croatia, let's say in many countries where the central banks have understand and they are working together with the government, because now the paradigm is to, let's say, to keep the bond yields low, because the bond yields are influenced by three major factors, and the first one is the key rate, and here the central banks all over the world, most of them, they don't have too much field to play, because they decrease the rates and there is no much room left to decrease the rates. Maybe our national central bank still has room to decrease the rate. If we are looking the inflation outlook, but this is what we are expecting one more rate cut. But also very important factors are the supply of the bonds and who will buy the bonds. And here is the central bank with the quantitative easing, because this is what Romanian central bank has started to do, following all other big central banks, including the Polish and the Croatian central bank. The governments will need to finance the deficit, and the biggest buyer of bonds is the central bank. And to be honest, in the last month, the only buyers in the world of the bonds, of the government bonds, were the central banks, net buyers, I mean. And this is very important, because the biggest bonds ETF and the biggest bonds found worldwide, they have extremely big outflows, meaning extremely big. To give you a measure, they in 1 week the same amount that was lost during 1 month when we had the taper tantrum in 2013. And at the moment, we can say that in the last couple of months, we had globally there were the biggest outflows ever from the bond funds. And to counter the countermeasures are coming from the central bank, because they are the buyers, and the most active central banks in this field is the Federal Reserve, which last week they changed their declaration, and now they are stating that they will buy unlimited amount of bonds, so that the curve will be the yield curve will be flattened, so that on the economy the impact will be that all the players in the economy could finance at a cheaper rate. This is very important for the economy to work. First, to finance on the cheaper rate, and then to let's say the sectors that are most affected to be helped by the government, because this COVID-19, it definitely changed let's say part of our life of keep the distance and how we'll interact. But also some industries like the airlines are very, very bad hit. And here are I mean Horeca Airlines and many industries that are in this socializing and traveling. Let's say they develop trend. It was a trend that was developing in the last 10 years. and they are very, very hard hit in the moment. And I think the business models will change here, and I think a lot of entrepreneurs will have to reinvent themselves in order to survive this this trend. And to be honest, I think the central bank have done their homework, and the governments they have also learned from 2008 and because the war. So I think that now they are looking to each other, like everyone is looking what the US is doing, what the Germany is doing, and what measures we can implement so that we can, let's say, not eliminate, because it's impossible to eliminate the side effects of COVID, but to reduce the bad outcome to the economy, because we are expecting a GDP decrease, maybe 10% or even more this year for most of European countries. And definitely we should have countermeasure to contain these negative effects. But as I said before, this will create a very big opportunity to buy equities in the long run, and also here the central banks were very important because they stabilized the bond market. And even if the bond market now is, I can say that it's liquid and it's stabilizing, was let's say stabilized in the short run. The corporate bond market, the corporate side, it's not as good as it is the sovereign. Because the yields for the corporates for some of them are much higher than where even before the ECB start the 700 billion program to buy corporate bonds, and the spreads also for the corporate sides at the moment are still very wide, and here I mean spreads for investment grade corporates like 3B plus or A minus. Still, the prices are, from my point of view, crazy. You will receive for some bonds the spreads are 5 to 6% wide, bid-ask spreads, and which is for an investment bond corporate with a rating higher than a country, a EU member country. We had this back in 2009 after Lehman defaulted. So let's say that the corporate bond market, it's not yet fixed, but I'm very optimistic that the central bank programs will fix the problem, because we will see with the delay or positive effects also on the corporates. And in the last month, we haven't seen Europe too many new issues. Yesterday we had 3 issues. Volkswagen was one of them, but also they issued at very high yields compared to where they borrowed last year. And I think this is a very important field to play. The ECB and the central banks also to step into the corporate bond market in order to increase liquidity here, where other central banks are active. And my message is to keep the eyes open, because we will have many opportunities on the equities now.
Yeah, thank you, Dragoș Manolescu. Okay, and it's very clear that the situation will not be, let's say, very encouraging in terms of GDP evolution this year. But what about Romania? Because Johan Meyer was saying that Romania will be doing better this year. What is your opinion, and how do you feel about the local stock market? And then
I'll give you a flavor of the Romanian investment market. Let's say the fund industry, because we monitor all the funds, all the open-end funds in Romania, and I can tell you that in a month, in the last month, so starting 1st of March, the outflows for the industry vary between 2.66, the lowest, to minus 34%. The highest outflow from a bond fund. So I can tell you that on average, we have around 20% outflows at industry level. Mostly bond funds and some equity or mixed funds. We have the biggest outflows in history. And here the National Bank was very helpful because they started the QA program and they stabilized the bond market, but there are still outflows in the market, and that's the true picture of the market. And what I can tell you is that these outflows are putting pressure on the prices, which are very low at the moment, and from my point of view are creating opportunities for those who are coming and are investing now, because they are buying at the higher yields. We had a repricing for all bonds, including the Romanian bonds, which are now trading at, from my point of view, very attractive yields, so very high yields. So those who are investing now will buy, let's say, will invest at higher yields, and also at the higher, if they invest in equities, they will invest at potentially at lower prices and potential bigger potential bigger profit in the long run. Regarding the IPOs on the market, to be honest, I don't see too many IPOs this year. We were advocating for Aeroportul Bucharest to see it on stock exchange, because we are looking at the past at Vienna Airport, which is listed on Vienna Stock Exchange as a proxy. We are hoping to see Hidroelectrica also, and but I don't think that we will have it this year. A lot of companies that had IPOs this year, they postponed the IPO. I'm meaning the big companies in the US, from Impossible Burgers to what we are looking to Airbnb and other big companies. Because of the market, because a lot of companies now, a lot of peers are trading at lower prices, and maybe they are not willing to sell here or to list the company here.
Thank you, Dragos. In your case, it's always with a little bit of salt and pepper. So, yeah, we totally understand that. Randu Hanga, please let us know if you have worked with the government, or how do you see the IPO market evolving, and also how we can encourage Romanians not to leave the markets, because we have noticed what Dragos Manolescu was saying, and it's absolutely normal that it's the behavioral and it's the situation that is creating all these exits. What more we can do in terms of somehow diminishing the impact and the emotional impact on the market?
Do you hear me? So I would look on a little bit longer run. I would leave apart the volatility which we currently see, and I would treat what's happening now as a big opportunity. First of all, I think that for us, it's not about not losing investors. It's about bringing more investors in the market. We are at such a low level in terms of investment community that we have to move forward. We have to improve the online operations. We have to improve the market access for the participants. And what I see when I'm looking at the current environment is that it creates a huge opportunity for us as a Bucharest Stock Exchange and as the Romanian economy. What we are noting, while going to shop, we see much more local products that we have seen in the last many years. We are realizing slowly that in difficult circumstances, we are relying on the local providers of products, of services. We have to have more local companies doing things. And there is the place for the Bucharest Stock Exchange. We together with the banking sector, we are those which are providing liquidity and which are providing capital to local companies willing to grow. So I think that we are living now in an environment which raises the awareness towards the necessity of having stronger local companies, stronger local producers. And there is a place where we have to be, we as a Bucharest Stock Exchange, have to be much more active in terms of communicating this, in terms of bringing more companies listed at the Bucharest Stock Exchange, and in terms of bringing more investors to invest and to provide capital to those local companies. So I think that, again, leaving apart the low-term, the short-term volatility of the stock market, I think that this crisis, as all the other crises in the past, are creating a lot of opportunities for us. And we are here to take these opportunities.
Thank you. Thank you, Radu Hanga. I will come back to Cristian Popa, as we also have a question from the audience regarding to the emergency ordinance related to the 9 months installments postponement that has just been published in the official gazette. The question is if these legislative measures should be read as being applicable exclusively to Romanian banks and branches of credit institutions, and therefore excluding EU banks acting cross-border under the EU banking passport, which are under the supervision of their home member state's competent authority. In the view of our viewers, this is an important aspect in many cross-border financing agreements. We don't hear you. Okay, now.
So basically, if I understand well, it refers to the treatment of loans taken by local clients or companies from foreign banks in the context of the emergency ordinance. In this respect, just to clarify a few things, we are consulting with the government, and the government is consulting with us in terms of the emergency ordinance, and usually we do this, but we do not formally approve this. We do not give a legal okay from our side. So what can I say? We will look at it. The foreign banks are not in our supervision. I should come back with a clear answer. Also, I understand that the final draft was just published, so my colleagues, I think, haven't seen the final draft, the last details, but we will surely look at it.
Yes, thank you, Cristian Popa. And do you work on any other scenarios? Would all these measures that were already taken would be enough, or do you think more would be needed in case the crisis will get longer?
Well, we work with different scenarios. Let's say challenging part is that there is not much data published from the National Statistics Institute. So we try to do our best with the data we have. At the current moment, I would say that the conditions are good. So I mean, major decision, I would not see any monetary policy decision in the, let's say, the next days or week. But we are closely monitoring the markets, the environment, and we are ready to decide. We can all, I mean, we're looking also at different measures to support the market. Not necessarily interest rate, but we have a quite large toolbox of potential measures to take if the conditions are needing it. At the moment, I would say that we're in a good condition.
Well, we were also discussing about budget deficits and how much reserves our country has and how many resources can be used in fight with this crisis. What is your opinion compared to other countries?
Well,
we've done better.
I mean, looking at objectively at figures, the government announced a fiscal package of around 2 percentage points of GDP. This is smaller than what we're seeing in the western part of Europe, but we'd also have to put it into context. Romania is coming after quite a run in terms of expenses and increasing deficits. So the policies that were implemented in the last years basically diminished the fiscal toolbox that can be used. On the positive side, the EU suspended the 3% limit in terms of deficit for the whole Europe. So this gives us some flexibility. Maybe also important to mention, out of the 2% fiscal package announced, less than half is actually fiscal in the sense that it will be seen in the deficit. Because, for example, when the government is giving guarantees, these are helping the private sector, but are not seen in the deficit. So, in this perspective, I would say there is room for increasing the package, but with I mean, having in mind that we come after a long period of expansionist measures from the fiscal side. And for sure, I mean, when the times will impose it, I mean, it's good that the measures are taken gradually. I would see the good part.
Yeah, that would be the side having the look from the government, but the economy or the entrepreneurs are complaining that they are too slow and the liquidities come with a delay because you have to pay the salaries today and you will maybe receive the unemployment subsidies maybe in 2-3 months. What would be the funding of these measures? Because I was also reading the IMF statements that 80 countries already filing for some loans. Would be Romania in a situation to get also some external loans or having the IMF or the IFIs coming back to Romania?
Well, I would see positively any capital that can be injected from IFIs without looking individually to IMF, EBRD, or European Investment Bank. I think it's positive that if we can get I mean, to get financing from these institutions, it's helping. It would help. Also, I mean, it would be great if the euros we could align with eurozone. There is this discussion about the Corona bonds between the southern states of Europe with the northern states of Europe. So basically, to issue European bonds for this pandemic, it would be great. I cannot say it even. I should say it even more positively to that if we could be at that table to be also part of these bonds. It's I'm sure that this would be positive for us. So I would see positively any capital that can be drawn. Yeah, without, I mean, ideally without conditions, without conditionalities.
That would be a too ideal world. That is for sure.
The IFIs are also supporting the efforts, and we could see financing lines that just want to lend a hand without putting tough conditions or without putting conditions. I mean, we see that.
Yes, thank you.
Here also are to mention the European Commission, who allow to tap into European funds, and Romania has a very low absorption, so theoretically we have a lot of space to tap into European funds to finance all the expenses for coronavirus. And I think this will be the best case for Romania to drive into this crazy.
And not only this, Dan, not only this, but we're also working from home, so we have more time to write European projects. So it would be great to access more EU funds.
Yes, yeah. I mean, I also encourage you, if you have questions between you, that's totally acceptable. I would return to Vlad Stoicescu, and I know that you are there in the front line, and there's a lot happening these days in the airports. Do you see? And you were mentioning about the Q3. Do you see any guarantee that we come out of this and everything will get back to normal?
The only guarantee is multidisciplinary, because every industry has to consolidate around a really fast solution, and that's not going to be the vaccine, as we all know. The fast solution might be point-of-care diagnostics, maybe self-diagnostics at home. And I see that London, the NHS is researching this solution right now, and there's a 2-week waiting period until the initial implementation. So that's why I hope that Q3 will be fruitful for us, maybe coming back around 60%. What I wanted to say is that we do have IFI financing options right now. We are continuing to collaborate with our let's say, institutions that proposed financing solutions for our investment plan. The IPO could be a measure that we bring in front. Let's say we hastily approve in order to refinance the company if solutions will not be found as soon as possible, because of course this crisis affects us even if we are an important piece of infrastructure and we cannot close down. We would like to be a fruitful business as well. So yeah, Q3 is what we're targeting, not optimistically, but realistically, because the economy has to pick up in some way or another. We can't stay locked up in our homes. Operations, we are 80% operations here and 20% business that can be done from home. And there are many other businesses that will go bankrupt like this.
And you also will be most probably, Vlad Stoicescu, implementing additional measures on checking the passengers, making various investments. Why not in ensuring distancing between passengers, right?
We have already implemented these measures. You can see them in my back, but on the window, because yeah, we're quite far away. But we do have some lines. We do have continuous announcements. But social distancing in airports is rather redundant due to the fact that there's no social distancing in the airplane. So this will have to be a personal issue, a personal hygiene issue that everyone is responsible for in his own home, even if we enforce other additional measures that we did enforce right now in the airport in order to ensure the public safety.
Mm-hmm. Maybe we'll have new type of planes with 2 meters between the seats. I mean, who knows what will happen next? And we will be selling just half of the tickets in an airplane.
That was my dream when I got into this industry 20 years ago, to see less crowded airplanes.
Okay, great. Yeah, thank you, Vlad. Johan, I will return to you in terms of shopping list, and Dragoș Manolescu was mentioning a little bit that it might be a good moment, and you somehow mentioned it as well. What sectors, what companies, what countries, what markets would be on your shopping list going further?
Wow. Okay, that's the billion-dollar question at the moment, Daniela. Look, I think I would let me start with energy companies, because I think energy companies have been suffering the most as a result of the oil price and the gas price decline. So I think there is still more pain that will come through in these industries, as they will have to adapt their business models to a lower price environment. We're not coming from the same types of peaks as we were during the previous crisis when oil topped $100 a barrel, and many of the companies learned very valuable lessons from that experience in terms of efficiency of operations and focusing on costs. So there, a company like Petrom is a great example. But I think obviously that's specific to the Romanian market. If you cast your net much wider, globally, companies that are providing services that enable people to work remotely, whether this is IT producers, manufacturers. Obviously, supply chains are being affected at the moment, but clearly there will be an opportunity to catch up with this as the situation normalizes. As always, software providers, so technology, soft technology providers will benefit. And then I think an industry that's also been very hard hit, also related to travel, but hotels and tourism, is this will recover. And there will be opportunities here, but now is still too early, in my view, to be able to access this, because we still don't know what the full extent of the slowdown will be. And then basic consumer goods. Clearly, this is performing exceptionally well at the moment. There will be a dip because panic buying has spending to be fronted for the time being. This will slow down as everybody has stockpiled enough of the necessities in the very short run. But I think what becomes clear through this process are the companies that are strongest in terms of keeping their stores stocked and managing the cash flows that are being generated by the businesses. So these are companies that you see globally and internationally. Companies like Amazon continue to stand out. Let's see. I think in my home market in South Africa, I was reading about the bond yields at the moment. There, the government bond yields are 12% at the moment, with an extremely weak currency. So this looks like an interesting opportunity, sitting a long way away. Obviously, the country there is dealing with some significant challenges. But the point is for investors to do their homework and to be comfortable with the investments that they're making.
Yes, quite clear. Thank you, Johan Meyer. Yeah, you mentioned just one Romanian company. I hope there will be more than just one company that you mentioned.
Yeah, of course. I think there are a number of companies in Romania that's worth looking at very closely at the moment. The entire stock market has been affected by the crisis. I think the banks are feeling a great deal of pain at the moment because of the measures that are being introduced to protect consumers. So we'll go through a period where individuals and small businesses will suffer insolvencies. The banks will see their lending dry up in the short term, but these will recover. Of course, it's too early to give a definitive timeline, but this is how cycles work. We're in the middle of the downturn at the moment, and as soon as the situation starts improving, any entrepreneur that wants to access funding to grow their business first will turn to a bank to provide that credit in order to grow the business. So this will happen again. So this I think is an opportunity in the making. And then consumer-facing companies as well that at the moment are not being able to operate normally. Again, these are companies that will recover, assuming they have a decent balance sheet that enables them to withstand the pain in the short term.
Thank you, Johan. I would now turn to the CEO of the Bucharest Stock Exchange, Adrian Tănase. As we all know, he's also investment background, leading the largest pension fund in Romania until 2 years ago, maybe. So the difference and the big difference that the Romanian capital markets has at this moment is coming exactly from the pension funds. So it's a strong support on the demand side. That is a big difference from the market compared to 2008 crisis. You were in the market back then. You are in the market now. What you have seen the differences? If you see the market performing differently than happened in 2008, and also as a next step, the messages towards retail investors and investment community in general.
Yeah, probably the markets are behaving differently. Yeah, I think the corrections nowadays are much more abrupt than in 2008. And probably it will be because the reasons are different, completely different. And probably it will be another proof that on the long term the equities will recover. Yeah? So the message all the time have gave to the retail investors is that they should have a long term perspective and they should have a diversification in their portfolio. And this is the message all the time you have sent. I'm all the time I have avoided to present the past year performance of the capital market as a proof of the performance in general of the capital markets, because on the short term could happen a lot of things. Yeah. And this is another proof that on the short term the risk could materialize from all kinds of directions. Yeah. And it is very, very difficult to predict the equity development on the short term. Yeah? So only the specialists, and probably also the specialists nowadays, are surprised by this event. And so to predict the short-term development of equities and even bonds, it's a very, very tough job. Yeah. So the message is that the advice I'm sending again to our investors, retail investors, individual investors, it's mandatory for them to have this long-term perspective and to have the discipline to invest even in this kind of times. Yeah. So they shouldn't stop to look at the market. They should invest and they should have this discipline to save into equities and in bonds. And probably this would be another occasion for the capital market to prove that on the long term they tend to recover. The losses. Yeah. So in a nutshell, this would be the message I already had towards investors, towards individual investors.
Daniela, just to add about the pension funds, I also consider this is a major structural change compared with a decade ago. We didn't have pension funds at that point. It's a new category of investors. And I think that this makes the market more efficient in the sense that there are more investors to look at fundamentals, to analyze the companies, the listed companies from a fundamental point of view. and basically to have more efficiency in the market. When more players are looking at the companies, I would expect that more chances to have some rational investors to value correctly the companies. So I think it's a major plus compared with the last time. So it's important to have local capital, quite a big pool of local capital to be there with a long-term horizon. It's clear that the pension funds look for a horizon of 20-30 years. So I see it as a major shift. Like you said, I think it's a big plus for the local market.
I also agree to what Christy said, and from this point of view, I think the Romanian market it's attractive because let's say the pension funds are the biggest buyer, are the biggest player on the buy side, and they are buying on the long term because they are not looking to speculate in the short term. They are looking for fundamentals and to buy into long term. And I think this is very positive for the Romanian Stock Exchange. And also, to give you a flavor, there was an article a few days ago regarding the Norges Bank pension fund, the biggest worldwide pension fund. And they were stating that they will start rebalancing the pension fund by increasing the equity side, because now on the equities market are opportunities, and also let's say the equity share in the total portfolio decreased because of the corrections. We have worldwide corrections between 20 to 35%. And this has decreased the equity share in the pension fund portfolio, and also this has let room for the pension funds to step in, to buy, to increase their share. And I think this brings into the game these players that they won't change anything in the short run, but in the medium to long term, they bring a lot of value. And also in the Romanian market, I was in 2008, and I can tell you that now you can see the pension funds buying into the market, and you can see their orders at the close or at the closing hours of the stock exchange, because they are active.
And also, I think it's important for the other classes of investors, because all the investors are looking at who can potentially invest in this market. And I can only make a parallel with, while I was managing a fund, we were investing in Poland, and Poland had a very strong pension fund industry. And basically, we were incentivized to invest there, because we knew that the pension funds are getting inflows and they are there to support the market. So I think it's a chain reaction, let's say.
Yeah, definitely. This is why I also opened the topic. Adrian, were you also in touch with the government and the Financial Supervisory Authority in order to find other solutions and to make things easier in these days? I know that we were also in touch with the Financial Supervisory Authority, and they have proposed already new rules for general shareholder meetings that could be taken remotely. I also saw your statements regarding making the fiscal statements more flexible and using digital tools. Have you been in touch with the regulator or the Ministry of Finance to find other solutions, or maybe issue some special treasury bonds or something like that?
Yes, especially with the authority, with the FSA, we are continuously in touch with them in this period to manage as good as we can and to pass this very difficult period. Our main scope being that to keep the infrastructure working smoothly. Yeah, so to offer to the investors the infrastructure to implement their trades nowadays as well. Yeah. And we are discussing also with the authorities about different solutions to make the investors' life easier. Yeah, and this fiscal package we are proposing. This is a discussion we started before the COVID-19 crisis, and maybe these days it's even much more needed. These kind of solutions to debureaucratize the fiscal procedures for the individuals, and the main proposal would be to have these taxes withheld by the brokers and the asset managers for the individuals, so the fiscal procedures to be completely simplified. So yes, the discussions are continuing on the already initiated direction. Yeah, maybe much more intensively, and we'll see. So hopefully this crisis will get much more mobility because this is another very important aspect that with no mobility maybe. This is a restriction in our way of working, yeah, and yes, hopefully we'll get much more mobility in the short run to continue our projects.
Yes, and actually I was mentioning earlier that maybe these times would help us progress more in terms of digitalization. Raduhanga, do you want to complement what Adrian said earlier?
Oh, just I think that you touched the point. I think I was looking yesterday at news that the government is sending the message that they are going to speed up the digitalization process of the relation with the public services. And I think that that's exactly what we have to do in terms of capital markets development. Because if we look at the all capital markets infrastructure, I think that what the weak spot now, or the missing link, is the link between the Bucharest Stock Exchange and the mass market. I think that the compression we saw in the brokerage industry, the decrease of in the number of brokers, and the let's say difficulty of opening an online account with a broker, that makes difficult for us the growth in the number of investors. I think that we have to make more fluid the relation with the retail investor to make easier the access to the stock market. And then I think in the current conditions of the market, and with the excess liquidity which we are going to probably see for the coming years, this is going to bring more players and more liquidity at the stock exchange.
And I totally agree. So that's an important step forward. Concluding our meeting, of course, we had a fruitful discussion, and it's more than we have expected in terms of timing, but they were very interesting opinions. Dragoș Manolescu, in terms of companies that stand out as their response and investor communication, can you provide some examples or industries, so companies that did very well in terms of communicating with investors? And Johan, same question to you as well. Oh, we can start.
You're meaning from Romania or from abroad?
Let's mention as well Romania, and then abroad maybe
also the banks that are communicating. Okay, from Romania, I've seen the banks that are communicating very well. Also, I've seen Petrom, who is hit by the oil price, who was hit and was communicating very well. Also Romgaz, to mention just a few of them. From abroad, there are a lot of companies. So starting with the 5G, which you are monitoring, and here, I mean, by 5G, also the big names that become small companies like Nokia and Ericsson. Some of them, they are cutting dividends and in order to invest. And I think this will be a very interesting thing with working from home, and the development of 5G, I think, will be more rapid than we think. This is one thing. Also, from the cloud companies, I've seen some of them communicating well, because we are looking also at big names like Equinix, which is in cloud and has let's say cloud spaces, real estate cloud spaces for Amazon and Microsoft. We've seen also Microsoft and these companies that are exposed to cloud and more from home. They were communicating well. We've seen also, I can tell you, some companies and states, and here I'm looking at airline companies and let's say big companies that might receive the help from their states, and here I mean Boeing, which most probably will receive state aid from the US, or will have the US as an investor in the company, will step in. We are expecting also the US to step into Delta and American Airlines to let's say to airline industry to help them. And let's say these are the sectors that we are following. Also in this cloud space, we've seen companies like SAP or Coupa that are very active. Also Volkswagen, Daimler, the auto industry was active, but let's say active, but not. They are not the best. The car companies now are not the best companies to bet on the stock exchange, although their prices have corrected massively. And as a bad practice, we've seen what was happening with Renault and the scandals, and what is happening with Renault, Nissan, Carl Gussen, and everything.
Yeah. I just want to add to Dragos's comments. He's highlighted very well the companies in Romania and abroad that have communicated well with not only with shareholders but with all stakeholders. I think just to add a slightly different perspective on the way that the investment industry broadly has been communicating with shareholders, is a number of different conferences, different formats. So, for example, here we are all today joining a video call on GoToMeet. Over the past 2 weeks, we've attended Zoom conferences with one-on-one, two-on-one meetings with shareholders. Tomorrow there's 2 days there's a conference that's supposed to be a general presentation to a large group of shareholders with the online PowerPoint, and investors dialing in from all over the globe. And these are investor meetings that would have taken place in person in Europe or in the US. But the industry has very quickly found a way around this by utilizing technology and making sure that investors are still given access to companies, not only in Romania but across the globe. And I think this is really important and a big development compared to where we were maybe 10 years ago. In the sense that investors and companies are still in a position where they can exchange information in a very free and short time frame, and this is really one of the critical issues in terms of keeping everybody up to date on what the most recent developments are, and trying to reduce the panic and the emotional activity in the market, because really it is the emotion that's driving a lot of investor decisions at the moment, and if we could just return to fundamentals, I think we would have a very different picture.
Thank you, Johan Meyer. Indeed, it's a lot about emotions, but we are humans, so definitely we are driven by emotions. Cristian Pop, I would return to you because we have a question related to your expectations in terms of inflation and budget deficit this year. We don't hear you.
Yes, sorry. Usually we publish our inflation forecast with the inflation report, but in the current period, basically we're seeing inflation coming down, mainly due to energy prices. And the other indicator was the deficit. On the deficit side, we do not disclose at all any figures, but it's fair to see it increasing. I mean, the finance ministry already announced a fiscal package. Also, the revenue side of the state, it's fair to expect that this will be lower. But yeah, I would expect it's single digit.
Okay. Thanks a lot to all of you. We have a final question, and even it would be great to end with how we started together with Claire Lavery, and thank you for being with us for the whole period. Because we are the Romanian Investor Relations Association. We are a group of professionals, companies, representatives that drive the investor relations and the communication with investors. The question would be, what, in your opinion, would be the three main things investor relations officers should take into account or do in the next period in their activities? Because we have seen that the expectations toward IROs is increasing. And considering that we are in the middle of the storm, what would be three key points that IROs should do in these times?
Sure, Daniela, thank you. I think it's, keeping it quite simple, and you can drill down into each of these as to what they might mean for each individual company, depending on what industry they're in, depending on the scale or the geographic exposure of the companies in question. But I think the first thing is for IROs and management teams to make sure that they are responsive, and the second thing, to make sure that they're accessible at all times. Investors have a huge amount of questions at the moment. There's so much uncertainty. There's a lack of visibility. So they have wish lists of things that they want to know. So the onus is really on companies to try and be transparent as best as they possibly can at the moment, and to try and keep control of the narrative where possible as well. So communicate with regards to what they have control over. The sell side, obviously, they want numbers and they want visibility into the future. That's difficult to provide at the moment. So it's looking at what measures companies are taking from operational perspective, and what they can communicate, what they have control over from that perspective. And from a practical, even more practical perspective, is make sure that you have all of your materials available on your website. Your website is your shop front, the shop front window. So make sure that you're making life easy for your shareholders and your target investors, that if they are seeking information and they want to be able to get it quickly, and perhaps not call you directly, that they can get it on the website. So it's all about being, responsive, accessible, and transparent, and basically highlighting and demonstrating how resilient you are as a company to get through this storm.
Yeah, thank you very much, Claire Lavery, Cristian Popa, Vlad Stoicescu, Radu Hanga, Adrian Tănase, Dragoș Magulescu, and Johan Meyer. This is just the order on my screen. It's not an alphabetical order or something like that. It was a very interesting discussion, and I think there were great messages that were passed through the investment community, to the financial community, and all those who were with us today, looking at us live, but we will be also coming back with a recording of that. And I think your statements are very encouraging, and it's very clear that we need to have a broader view. We need to look farther than that, and we should not just sit in the house and expect things to solve by themselves, but take action and be proactive. And this is what we were encouraging our members and our companies to do as well. We were today discussing, and there were great messages related to the market expectations, when this will recover, the measures taken by the National Bank, measures taken by the Bucharest Stock Exchange, brokerage industry, asset management industry, and also the Bucharest Airport. We would also like to thank our media partners that were helping us broadcasting this event, Money.ro, Financialintelligence.ro, RomanianJournal.ro, Business.ro, Association of Funds, Bucharest Stock Exchange, also Association of Smart Cities. And in terms of transparency and communication, we have gathered all listed companies' communication on COVID measures on our ir-romania.ro website. The Romanian Investor Relations Association has also strategic partners, and we would like to thank Bucharest Stock Exchange and Electrica for supporting us for this year even more. And I'm sure we will get back soon with even more optimistic messages. Thank you all, and wishing you health and good business, all of you.